Hi, this is Kerry Artak with Wicked Stocks bringing you updates. A day delayed, my apologies, I've been traveling, but updates nonetheless. Weekly update in the Magnificent Seven or the Mag 7, where I cover Alphabet, the old Google, Amazon, Meta, Apple, Microsoft, Nvidia, and Tesla. And so let's jump back to Alphabet, symbol GOOGL. This is a weekly chart. And once again, I'm updating you on the longer term parameters for all of these. There's really not a whole lot of near term, short term. There's a little bit of that. But for the most part, this is big picture analysis. And as you can see, it was 3 weeks ago that that this stock actually settled above on that blast from a few weeks ago, above the 222.19 rising channel top. That is about 2.5 years in the making. It'll be 3 years roughly early in 26. And it does indicate, as I'd mentioned before, these wave counts. You know, there's not a whole lot to lean on when you get into this uncharted territory, this unprecedented price points. The last structural resistance that I could see was 222.19. And so holding above 222.19, we do maintain the 264.24 to 273.57 area as I think I've been saying 2 to 3 month, 3 to 5 month target. We're 3 weeks into that now, and I'm just guessing here, maybe 60-70% of the way to reaching our objective. 264.24 is B minus A plus C. So you're basically taking the distance from the October 22 low to the Feb high of 24 and then adding it back to that April significant pullback low. That is a significant wave count in its own right, and you also have another meaningful wave count. The Feb high minus the April low, you flip that on its head 100%. A B minus C plus B is 273.57. This is an area this market can grow tired, exhausted through the rest of the year, possibly into the first quarter of next, and fall away perhaps. And it is expected. You know, with present volatility and the present market direction, you know, we gapped higher this week. On Monday, we gapped above Friday's high. There is a gap now between 242.25 and 244.66, this week's low. And so that is a sign of strength, of course, unless we were to fall back and close that gap later this week. I don't see that happening. I think we could just be 2 to 3 weeks away now from reaching this upper zone, where if you're long and have been long, and some of you may be long following this buy signal, this is an area to take at least some profits. Now, I'm a firm believer when you have a vertical market like this, you at least hold on to some of your long position in the event it just keeps going, and it may. A downside, 244.66 is this week's low. It has greater meaning next week if this low stays. In other words, it will either be the low of the high, or next week we push a little higher, and if we collapse back below 244.66, we then have this key reversal high or a bearish engulfing pattern in candlestick speak. This week, I think if we close back below 242.25, close the gap, and then close below the 242.25 level, the market is back on its heels and can, by the end of October, revisit 222.19, where we could bottom out through the rest of the year into first quarter of next and round back up again into the mid 260s to low 270s. Taking a look at the downside, I'm going to refresh your memory here on 222.19 is the long-term channel top. This is just a long-term possibility, nothing relevant this week. But if we did close back below the 222.19 long-term channel top, then we fall within 3 to 5 more weeks, perhaps a couple of months at the most, to this meaningful support area right now, 199.92, where we actually could bottom out on a monthly, possibly quarterly basis. But that's quite irrelevant at this point in time. I'm going to move on to Amazon. Amazon last week pushed into the zone of resistance we've been mentioning between 237.68, the high weekly settlement that was put out back in January, and the high itself, 242.52, that was also put out in January of this year. This is a zone of resistance. You're either selling this, you know, near to mid-term because you're long, or perhaps you're playing the short side, or if you're wanting to go long Amazon and you're not in a position at all, this is the next indication that if settled above 242.52, 2022, we would expect within several months this significant long-term channel top that goes back to the January 23 low. So it is almost 3 years in the making itself. It becomes a 2 to 3 month objective if we close above 242.52. The 264.23 structure able to contain buying on a quarterly, possibly annual basis. But no, we're not expecting this unless we close above 242.52. Until then, we can fall back to these structures here over the next, I don't know, month or two, holding below, once again, this 237.68 level will keep the 209.72 to 213.74 region in reach over the next month or two. And in fact, the low, the high, how should I put this? We have got the April low, right? Last week's high was the highest we've been, the highest we've marked since the April low. So the low of that high does have its own pivot point qualities, and that is 226.29. If you look inside the yellow square, you'll see that black bar at 226.29. That is last week's low. If we wind up closing below 226.29 this Friday, that is a sell signal into October over the next 2 to 3 weeks, 3 to 5 at the most. 209.72 to 213.74 in reach. This is a solid zone to take profits on a short position and to go long. So in my opinion, as far as Amazon is concerned, you're either going long, if you don't have a position, you're going long with a settlement above 242.52, then anticipating 264.23 within several months, or you're going long on weakness, bottom picking the 209.72 to 213.74 area, where we could round up again into the 237.68 to 242.52 region within several months of testing 209.72 to 213.74. Now, if over the next few months we close below these structures, and they are changing weekly, we'll be updating you weekly, then we do have a significant sell signal through the rest of the year and really through the first quarter of next. This is more of a 3 to 5 month sell-off. This was about 4 or 5 months from February to April. That was more about 3 months. So yes, we could see this again within 3 months of closing it below 209.72. I wouldn't be surprised to see the upper 150s. On to Meta. Meta is hanging on to this channel bottom that really kind of goes back to June. This is a 3-4 month channel support by a thread. We broke it 3 weeks ago. It's been holding roughly on a week-by-week basis, especially the last couple of weeks, 755.68. And as long as we do not close below 755.68 on Friday, the 835.04, a 3-year channel top, remains in reach. With present volatility, I'm going to call that within 2 to 3 months. With a spike in volatility, we could see it potentially by the end of October. Either way you slice it, 835.04 is a significant zone of resistance that may well contain buying through the first quarter of next year, and we can fall away from there. If we were over the next few months to close above 835.04, we have a long-term buy signal that should then yield ultimately the 1126.53 full channel extension, the same distance that we find really from this April low to the channel top itself. And this is what, a 6-month move. This could be within 6 months as well if we close above 835.04 in the coming months. Until then, if we close below 755.68 this week, for instance, I would anticipate its sister formation at 673.26. This could be within 2 to 3 weeks in a spike in volatility. It could also take the better part of 2 months with present volatility. Closing below 755.68, 673.26, rising weekly in reach and able to contain selling through the rest of the year. And from here, we can round up within 2 to 3 months, back up to, not back up to, but up to, for the first time, this channel top at 835.04. I could actually kind of redraw these right now. I don't know if I'm doing it precisely. Bear with me. So it is really, 673.26. You see in the little yellow square. So if we close below 755.68, this, what is it again? 673.26. I'm going to actually just type it out there, would be likely within what I say inside of 2 months, could be 3 to 5 weeks with a spike in volatility. We could bottom out here through the rest of the year and then round back up to this formation. This would be at the very end of the year into the first quarter if that scenario holds. And then big picture, if we were to, over the coming months, close below 673.26, we have a good high for the year through the first quarter of next, and within 2 to 3 months, 3 to 5 at the most, I would expect the 520s, but not unless we close below 673.26. At this point in time, I'm saying Meta is a solid buy in the low to mid 670s. I'm talking long term, right? I'm talking through the rest of the year and climbing. It's a solid buy, and the solid sell is 835.04 in climbing. It really is these two structures here, these two extremes. Let's move on to Apple. Now, remember, Apple, I provide at wickedstocks.com for paid subscribers on a week-by-week basis. So I'm just giving you the very basic. In the Apple videos, I go through roughly 6 or 9 charts, and I really nuance all of these levels. But what occurred last week is after closing above it the previous week, the 237.35, this is a channel bottom that goes back a year and a half, we closed back below it. Now that is a sign at least of neutrality, like a neutral dynamic where we could get stuck in a consolidated framework for a while. But I do think you have to skew to the downside. It's not a significant sell signal, or I should say more like a magnificent sell signal, because it's just not one that you jump on aggressively. I do show you, though, in this chart, the low of the high that was put out 3 weeks ago, 226.97. Now, this is a little different than what you'll find in the Apple video that we provide our paid subscribers. I nuance this in terms of a different level, but basic, 226.97. If we close below the low of the high, we have a sell signal. After closing back below this channel structure, which is a sell signal unto itself, you would have a secondary sell signal that should then yield a return to this 5-year channel bottom at 193.26 within several months. I think 193.26 is in reach over the next few months anyway. It's just the final shoe to drop on that scenario would be a weekly settlement below 226.97. On the other hand, I can take us back to this chart that if we do close this week back above 237.35, we then skew upward again, expecting 260.10, that all-time high from December of last year, within a couple of months. And over the next 3 to 5 months, I think 276.87 realistic. This is a 5-year channel top, the bottom of which held back in April in a pretty sloppy way. This was the tariff war, the Liberation Day stuff. And then during that very same week, Trump backed away on handheld devices. Apple products, made an exception for Apple with a Chinese trade. So that is the big picture for Apple. Let's move on to Microsoft. Now, if you recall Microsoft, we've been trading up until this week below the low of the high, the significant spike high where we tested this long-term channel top at 561.22 and fell away. We're now back above not only the low of the high, which is 509.43, but we're also above the high of the low from 3 weeks ago. And if we can close this week above 511.96, the secondary sell signal that occurred about a month ago below 509.43 has been neutralized. And with that neutralizing, I would anticipate 535.32 within 3 to 5 weeks, possibly. This is a significant channel structure in its own right. Yes, we took it out about 2 months ago, but we never closed above this. What we did is we pushed through it, settled above it on a daily basis, blasted up to its more significant sister formation within 3 to 5 days, only to collapse back on Friday to close below it. So this has never been settled above, and I think it is a significant zone still, 535.32, still capable of containing monthly, possibly quarterly buying pressures. You could combine it with 561.22 as a long-term range of resistance. Or if you're kind of a 3 to 5 week swing trader, know that closing above 511.97 indicates 535.32. There's a 3 to 5 day upside swing trade unto itself. If we close then above 535.32, we have the next 3 to 5 day swing trade to the upside at 561.22, where we could top out through the first quarter of next year and fall away. And if we were in the coming months to close above 561.22, we have an increasingly vertical rally on our hands that should play out well into 26. Downside, if we do close this week back below 509.43, that will keep this market on the defensive. And over the next several months, as I have been saying, 468.35, this high going back to July of last year, in reach, where we could not double bottom, but we could bottom out at this old high on a monthly basis and perhaps bounce nicely. We'll see where we would bounce to at that point in time. Last thing I'll say about Microsoft is a settlement below 468.35 in the coming months sets up this 368.18 as a 3 to 5 month target. This is 5-year channel support to 5-year channel resistance at 561.22. And so I do also want to mention, I've mentioned this before, that after testing 5-year channel resistance at 561.22, one must allow, and I'm talking 1 to 2 year possibility of 368.18. It clarifies with a settlement below 468.35. Let's move on to Nvidia. Nvidia we cover for free every single day on our Wicked Stocks YouTube platform. And this is basic. I would just invite you to watch the video because we do nuance that as well on a day-to-day basis. But this is just sort of a rough sketch. 181.83. We have other elements on the daily chart that we're using as our buy signal. You may already be aware of that. But if we close above 181.83 at the end of this week, we satisfy a couple meaningful buy signals that should, over the next 2 to 3, 3 to 5 months, yield 219.64. It's a full wave count from the November high. Sorry, that would be the January high against the April low. Until then, we can fall away. We do have a failed long-term buy signal that did play out about a month ago when we closed back below this 2.5-year structure after closing above it 2 weeks earlier. So I see this market as slightly on the defensive. It has yet to fall away. I do think our next clear sell signal on the weekly chart would be a settlement below 167.02. So if you're looking at selling Nvidia, you're either A, selling 181.83 on strength, or you're selling weakness with a settlement below 167.02. Either way, I do think over the next few months, 148.94 in play. Unless we close above 181.83, then it's just the opposite. So, keep that in mind. Let's continue with Tesla, the last stock I will look at. We also cover Tesla every single day on our Wicked Stocks YouTube platform. We had a settlement last week, Thursday of last week, actually above this 360.76 structure after holding for a number of months, going all the way back to early May. That settlement last Thursday did set up long-term 523.03. I keep calling this a 5 to 8 month target, but with the way this move is playing out, this could be potentially by the end of the year. I would invite you to just watch the daily Tesla videos to apprise yourself of those precise points, because this is more broad brushstroke. If, however, we were to collapse back over the next few weeks to 360.76, it has a newly formed rising 1/3 speed line at 355.29. So this is your base of support, above which, as I've already said, the 520s in reach over the next 5 to 8 months or sooner. If, however, we were in the next few weeks to collapse back below 355.29, we have ourselves a sell signal I'm going to call this, with present volatility, this could be 2 to 3 weeks, could be 3 to 5, back to 297.61, rising channel support, able to contain selling through the rest of the year. We could then round up from here, and this is our downward pivot point into the first quarter of next year. If we were to close below 297.61 in the coming weeks or months, I would expect the mid-160s within 3 to 5 months or less. But until then, this is the image I want to leave you with. All systems go to the upside above the low 360s, expecting the 520s in the coming 5 to 8 months or sooner. Boy, I hit 17 and a half minutes there. I am going to leave it at that for this week's update in the Mag 7. You have a great week.